You've heard of the supply chain crisis. Who's gonna fix it? Some investors believe it's Freightos, which is going public at a $435 million valuation, bringing digitization and price transparency to freight forwarding. In today's video, we talk about some of their investors, including British Airways and Qatar Airways, the bull and the bear case for the equity, and the enormity of this market. Stay with us.
I'm Hannah, this is Erin, and you're watching the Piper Rundown. We analyze business and culture to help you win. Listen, we have a mission here on the Piper Rundown, and it is to help you build a better business brain. And we think you can do that by smooshing the like button of this video. Just give a little smoosh.
We don't think we know.
That is true. You know what? Our business brains have expanded so much that we do know.
Freightos has announced that they're going public via a SPAC that will value the freight forwarding platform at $435 million. As a part of the SPAC, they can get up to $160 million worth of net capital to their balance sheet. At a minimum, they will add $80 million. The Jerusalem-based freight booking platform has made 3 recent acquisitions that make up a very interesting business with 2 pistons of revenue generation. After being founded in 2012, their first acquisition was Web Cargo, a SaaS solution for logistics firms. That was used to generate revenue from the other side of their marketplace, whereas Freightos was a platform that primarily charged importers and exporters for efficiently booking spots in different cargo providers. After that, they made the acquisition of 7L Freight, which is a database to make the SaaS platform that they offer to those logistic firms more robust and make greater stickiness and retention for those SaaS payers. They then acquired ClearIt, a customs brokerage that allows those importers and exporters on the Freightos platform to get more of their paperwork done as they make their freighting purchases. One of the reasons that this is what you would call one of the later or last arenas of the economy to be digitized is because it is not only enormous, but it is tremendously fragmented. Almost anyone can buy one boat, one ship, one plane, and get into the cargo freight game. And there are a wide diversity of third-party logistics platforms that plug into these from all sorts of different directions. Some of them use Google Chat, some of them use WhatsApp, some of them use email, some of them use text. It's very hard to simplify everything onto one single platform, collect all that data, make it legible to all of the different players. Freightos is aiming to do that. They have taken on investors, including Qatar Airways, International Airlines Group, which owns British Airways, and FedEx, and are basically taking the approach of, if we can make all these cargo slots more legible, not only will that allow those that are making the trips to fill up the entirety of their fleet, but also allow better price transparency and therefore lower effective prices for those that are buying freight spots.
Can't tell you the last time I bought a freight spot myself, but I know people who have would be interested in some numbies, Erin.
I can give you some legibility into the impact of the last 2 years, all sorts of supply chain issues. You hear it in the headlines, you see it maybe expressed in inflation when you go to buy something. Here are some tangible impacts of the increasing price of shipping due to the supply chain constraints associated with the COVID pandemic. In 2020, if you went to ship a refrigerator, it would cost about $58. If you wanted to ship a TV, it would cost about $4. If you wanted to ship a piece of furniture, it would cost about $50.
Okay.
In 2022, $595 to ship a refrigerator.
Stop.
$44 to ship a TV, $516 to ship a piece of furniture. Now, some people say this is temporary congestion, this will get worked out, prices will come back down. Other people, like Peter Zion, which is an interview that we're dropping very soon on this channel, will tell you that the unraveling nature of globalization and international trade will lead to persistent higher prices for international shipping. If you are one of these freight platforms, you have a consistent take rate, and as those prices climb, you can expect that to have a positive impact on your bottom line, despite the fact that your customers are struggling with higher prices. Freightos has scaled to more than 10,000 importers and exporters on their platform, more than 3,500 forwarders on the platform as well, and over 200 different carriers, 30 of which are airlines. Some of those airlines include Qatar Airways, Turkish Air, American Airlines, Lufthansa, and Etihad. What these airlines do to maximize their effective revenue and path to profitability is sell the cargo space under the plane where the passengers are situated to folks that are trying to get their freight somewhere relatively efficiently. You can put it on a boat, it'll get there much more slowly. If you need it quickly, that airline is going to be the best solution for you. Allows basically the tickets for the passengers to be sold at cost, and that cargo sold at the bottom to be one of the drivers of potential profitability, in addition to getting you to sign up for one of those credit cards. Freightos, which I said again has been around since 2012, did $12.9 million worth of revenue in 2020. They did $16.6 million of revenue in 2021, and they're estimated to do about $21 million in 2022. The breakdown of that revenue is about 60% SaaS, 40% platform fees. Long term, you look at the companies like Airbnb, Booking.com, which we're going to talk about in the comp section. They are platforms. They have a take rate on all the transactions that happen. That is the long-term pie-in-the-sky vision here. But the B2B SaaS platform is something that is much more scalable and saleable by a sales force into these different logistics firms. And so therefore it's driving more of the revenue here in the shorter term. They are not growing this revenue profitably. They have negative $10 million of free cash flow in 2020, negative $12 million in 2021, and are estimated to be about negative $19 million in 2022. So it begs the question, their revenue estimated in 2022 will barely be $2 million more than their net negative free cash flow. Oof. I am not sure that this is a market that we're entering that will be particularly optimistic about that type of business model. If they were selling the growth story though, they would point you to their gross bookings value, which was just $69 million in 2020, but 2021 saw $302 million of gross booking volume.
Sounds like we're hinting towards the bull and the bear case, but it's not time for that yet. We'll move on to the comp section where we discuss comparable companies and competitors in the space.
So they're trying to roll a couple businesses into one. The first that we're going to point to is the kind of SaaS intelligence platform that is more associated with their web cargo acquisition and the 7L Freight acquisition. Amadeus IT, which is a European company founded in 1987, has an effective $27 billion market cap. Sabre, which is a Texas-based similar IT platform, has a $2 billion market cap founded back in 1960. So their basic premise is we can have a more digitally forward, technologically sophisticated intelligence and technology platform for these logistics companies and can steal market share from those two players. Simultaneously, they really are trying to drive home in their investment deck that this is a platform play. Airbnb is a sexy platform, Expedia is a sexy platform, Booking.com, one of the most underrated sexy platforms in terms of scale, in terms of business strength, $94 billion market cap, where people can go on, figure out the logistics that they want for their own personal travel, book it themselves. Booking.com effectively collects a fee for aggregating that attention, that demand for these travel logistics, and then facilitating the transaction to occur. Now, all of this fails to acknowledge the other gorilla in the space, in the room, Flexport, which is also coming into the logistics, the international commerce arena, which is an enormous market, with the premise that there needs to be way more digitization. There's way too much paper, there's way too much fragmentation, and if there was simply legibility, clarity, unity between the digital standards and norms that are being used between all these different players, the forwarders, the carriers, the third-party logistics providers, that there could be an enormous amount of efficiency gleaned and return to the bottom line for clients. They raised $935 million in their most recent round of funding, which is double the effective valuation of Freightos in this SPAC, and Flexport earned an $8 billion market cap. So they are the follower here, they are not in the lead, and that has to be acknowledged as we predict something for the future.
Wow. All right. Well, let's move on to the meme factor, where Aaron and I discuss the memeability of a company on a scale from 1 to 5. 1, all the negative memes. 3 is completely neutral. And 5 are all the positive, dank memes. So Freightos is tricky. I think it's a great name, and I think specifically for this industry, you can't really be more on the nose. But particularly in this time, all you see around shipping and freight are the negative memes, like the supply chain issues and all that. So
they could have the savior. They could be the savior to that. That's a good position. You feel that pain. You're all feeling that pain. Look at us. Look at us.
That's fair, but I think the general tone around it is negative. I'm going 2.1.
Wow.
Yeah.
I'm going 3.9. They're estimating to do $21 million worth of revenue and have a massive loss, and yet have a valuation of almost $500 million. That tells you there's some hype, there is some excitement here, and candidly, some people just praying for some sort of solution to the pain. And even if they can't deliver on that, they're going to be able to sell towards that pain that so many customers and clients are feeling.
True.
So I think they have a ton of wind at their back.
Okay. Let us know what your meme factor score is in the comments. And if you haven't subscribed to this elite channel yet, what are you doing?
What are you thinking?
What are you thinking?
Don't you want a big business brain?
The big juicy business brain? Oh,
Oozes out of your ear?
Gross. I hate the direction we went with that. On to the bull in the bear case.
A couple big points here. One way to look at fragmentation means that there can be a lot of winners. So this is not a winner-take-all, winner-take-most solution necessarily, considering the fact that they have 19 of the 20 biggest forwarders using the Freightos platform. So if they can carve out their little niche, maybe they can plug into Flexport, plug into some of these other solutions, they can retain relevancy for a very long time. In addition to that, the inflation of these costs to ship mean that even a basic take rate is going to continue to generate a lot of revenue for a business like this, because they are basically taking a percentage of a proportionally larger pie as all these firms spend on these solutions. On the bear side, we already referenced the Flexport competition. I want to talk about a couple other points. One is controversy associated with the disclosures that came out with this public offering that Qatar Airways is a major shareholder in addition to a couple other major shareholders. One of the questions, and you can understand why they would want to invest, because they get a little bit of a taste, a piece of one of the platforms that they're using to sell their cargo space. So they're kind of, taking a bite from both sides, the same way we talked with the Symbotic SPAC associated with the automation of Walmart's warehouses. So you can understand why the big corporate would do that, but it begs the question, will they struggle to sell other airlines onto the platform, knowing that airlines like Qatar and British Airways might have an inside track to getting preferential terms, preferential pricing, preferential positioning of their cargo being sold versus some of their competition. They have board seats, a Qatar board seat, a FedEx board seat given away associated with these investments, and it makes you wonder, will they be an even platform the way that, it's not like Airbnb owns their own portion of real estate that they're selling on their platform.
Right.
Booking.com doesn't own some of the hotels, some of the airlines that they are highlighting on that platform. They'll sell ads against it, but they won't have that specific vested interest. Mm-hmm. In conjunction with that, this is a space where there is the acknowledgement that technology has to be applied to create things more efficiently. And with that premonition and the enormous fragmentation and the competition that comes along with that, I am skeptical that the margins that they boast, which they talk about 60% gross margins extensively on their investment deck, I am skeptical that those can persist in such a fragmented and competitive space. The reason, we talked about this years ago with one of the big oil change companies. Mm-hmm. And when there's a dozen different mechanics that will do that job for you, and it's a very low barrier to entry to participate and to offer that service, you don't have a ton of pricing power in that type of market. Right. And so I am skeptical long-term of Freightos's strength and kind of persistence of their gross margin, of their margin generally, unless they can just hit hyper scale, which they'll show you a graph that goes hyper vertical on their thing. But being around for 10 years, going through not just the COVID pandemic, but just bringing this solution to market and only doing $20 million worth of revenue, leaves me lukewarm on their ability to actually hit the scale required to have those fantastic margins.
Fair enough. That's a rundown. Thank you for watching. If you've stuck with us this long, we appreciate you. Please smoosh the like button. It would really make our day, and we'll catch you in the next one.